Ladies and gentlemen, welcome. My name is Peter Olwach, a stock market researcher and investor. I talk people about the stock market, telling them to save, invest, grow wealth in the stock market. I'm reading from The Intelligent Investor. The book was written by Benjamin Graham, and it has an introduction from Warren Buffett, the richest stock market investor. The topic today is allocation of money between bonds and stocks. As an individual, I pride myself in telling people to save and invest in the stock market, because I believe the stock market has the ability to help us grow money quickly. In fact, there's a theory I'm selling, and the theory is that you can grow money by 10% per month and repeat that every month for 12 months, and you can make 100% return per year. You can get a copy of my book to see the theory and practice the theory, because I believe you can make 100% return in the stock market if you are smart enough. And I've been able to test it and been able to try it with 9,000 Kenyans. And now I'm reading this book by Warren Buffett, by Benjamin Graham. Benjamin Graham was a teacher. He was teaching financial accounting in Columbia University. And together with David Dodd, who was a professor at Columbia University, they authored a book called Security Analysis. That was the first book that was authored by Benjamin Graham in 1934. This one is just a follow-up book to Security Analysis. And this one was authored in 1973. This one was authored in 1973. And now the topic now here is allocation of money between bonds and stocks. Benjamin Graham argues that they should be 50-50. 50% of your money in bonds, 50% of your money in stocks. The reasoning is simple. Stock market can be very volatile and can give you a lot of pressure and heart attack, especially when the stocks go down. And bonds is relatively stable, with a stable return of about 12%. In Kenya, that is. In America, the returns is a bit low. So Benjamin Graham says this: we have suggested as a fundamental guiding rule that the investor should never have less than 25% or more than 75% of his funds in common stocks, with a consequent inverse range of between 75% and 25% in bonds. There is an implication here that the standard deviation should be an equal one, a 50-50 between the two major investment mediums, 50% bonds, 50% stocks. That is the guiding rule. You will have 50% of your money in bonds, 50% of your money in stocks. For me, that guiding rule should be more practicable, or it should be more practiced by those who are above 50. Or better still, those who are above 60. Because for them, the stock market is too volatile and it can sink with your money. And before you wait for it to recover, you'll be in serious stress. For us who are still young, even if the market collapses, we have time to recover. And markets do collapse, markets do crash. During Corona pandemic, the markets went south. During the 2017 post-election violence, the markets went down. During 2008 financial meltdown, the market went 8. In fact, my business friend Mike Ayo, he tells me that every 7 or so years, the markets crash. Actually, about 10 years, every 10 or so years, the markets crash. And so for him, he says that you should always prepare. So 2008, then we have, of course, the corona meltdown, corona trouble in 2021, 2020. So for him, about 10 years. Then, of course, going back, we had the tech bubble, USA.com tech bubble. So Mike Ayo says that, averagely about 10 years, there's always a crash, a big crash in the market. So you should always prepare as an investor. So these are guiding principle of 50% in the stock market and on the bonds is good. My question to you is, are you investing in the stock market or are you investing in the bonds? Or you're saving your money in the circle? Where is your money saved? Majority of your money, where is it saved? Would you follow this principle of 50% bonds and 50% circle? Or you put all your money in fixed deposit account? Where is your money? I would love your comments in the comment section. If you want a guide of how to invest in the stock market, I have a guide. I published this book courtesy of my master's computer science, and it is highly packed. It has the finest gem. It is the finest gem, and it will guide you in your stock market journey. If you're new to here, subscribe. If you're not in our Telegram group, join our Telegram group and learn about the stock market. Thank you so much. Bye.